Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the Nifty snapped a 3 days of losing streak to recover some of the lost ground as of yesterday. Both the benchmarks, the Sensex and the Nifty, had staged a smart rebound with gains of 875 on the Sensex and 305 on the Nifty as of yesterday. In fact, it was also a global recovery. The bulls were not only aided by a positive handover from the Wall Street, but also comments from the Bank of Japan, where the deputy governor said that rates will not be hiked in the future if the markets are unstable as well. We did see the beaten down counters, stocks within the PSU pack, stocks like IREDA, also HAL. These were which were on a 6 days of a losing streak. All of these stocks coming back sharply in the trade. Now the big question is the recovery for real or a bull trap truly, right ahead of the two key events of today, one being the RBI's policy decision and the other being the weekly options expiry of the Nifty, something that we'll continue to tell you over the next 1.5 hours. Very good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. A very warm welcome to all of you on Market Today. Not only do we have the weekly expiry of the Nifty, the point is that there is a mild pullback on the GIFT Nifty, which at the moment is looking at a 150, 140 point of a gap down. Just as over the last 2 or 3 trading sessions, all gap ups are being sold into. Essentially, it means that there is no buying activity beyond the gap up and the index flattens out. Similarly, on a gap down, there is no point trying to sell into the market. And that's the main theme, that you stay invested and you look at markets from the point of view of a slightly longer term. GIFT Nifty, as I said, is pointing to a downtick. The cues that are coming in from Wall Street are weak, and that's mainly because of earnings that are coming in on Wall Street, and they are just sort of pushing indices lower. The 3 major ones close near day's low. Sakshi will be giving you a lot of information on that. The other major event today is the aftermath of the credit policy. Remember, at 10 o'clock, the Reserve Bank of India Governor, Mr. Shaktikanta Das, assumes charge. Till then, the markets are likely to be flat after the gap down. And depending upon his policy stance, most rates are most likely to be held constant. There is absolutely no change that is expected. The macro numbers are right there in front of you. India's cash reserve ratio is at 4.5%, the reverse repo at 3.35%, and the repo at 6.5%. There is absolutely no change expected there. The only thing that is eyed is the Reserve Bank of India's commentary on inflation. How do they see it as of now? Remember, core inflation is below 3.5%, and that's a good news that's coming in. Therefore, the first 1.5 hours of trade will be dominated by this gap down, and only then, after the commentary is over, will we get a sense of direction. But cash remains king. You are requested to focus only on the cash counter, especially on the PSU pack. Remember, as Sakshi had pointed out just a moment ago, there was a lot of hectic activity on cash counters from the PSU pack. Railway came back into focus, RVNL, IRCON, IRFC. There was a smart move on defense counters after the initial gap down. Therefore, Cochin, Garden Reach, Hindustan Aeronautics came back into fashion. And of course, who can forget the sharp rally on energy spaces led by ONGC, Oil India, BPCL, HPCL, PFC and REC. So focus on that. Those are stocks that have corrected anywhere between 10, 12, 15, 23% from their peak, and they offer an entry back into the markets. As far as the other set of the market is concerned, pharma and FMCG are in thick demand, especially pharma. We've seen record highs on Aurobindo Pharma, Glenmark, Natco Pharma. Lupin is headed that way. Mainly the earnings yesterday by Lupin were a driver for an uptick on pharma. We'll be keeping an eye out on frontline counters like Sun and Cipla. Apart from that, if you look at the options picture, Nifty futures have corrected 2.7% or 700 points. There is a strong put writing support at about 24,000. Let's see how that matters. But if the Nifty does not break 23,983 and 820, which were the two lows that we are tracking over the last 1 week or so, then things are fine. We'll wait for this gap down to be absorbed, and of course buying support will come in. Sakshi will give you a very critical number on the FII versus DII battle that happens. Just a hint, the DIIs were ahead yesterday, so that number will be very interesting. And as Sakshi often points out, India VIX, we'll be keeping an eye out on that one. This is the fear index. Over the last 5 trading sessions, you've seen an uptick of 25%, so keep an eye out on that one. A very strong support on the Nifty at 24,000 and a very strong resistance at 24,300. This is the monthly option chain that I'm talking about. And as far as the internals of the market are concerned, 8 F&O companies are going to report earnings today. On them, Astral, ABB, Container Corporation and Biocon are the 4 major ones. The earnings that at least that I am keeping an eye out on are fantastic ones that have come in from Kirloskar Oil Engines, from Radico Khaitan, from the Bombay Stock Exchange, and those earnings that have disappointed are from the PSU, Hydroelectric Power Giant and HPC, and of course GMM Pfaudler. So keep an eye out on these counters. Bank Nifty has been a pain point over the last 15 odd days. It's corrected 6% from its most recent high of 53,350. It's resting on its 100 DMA, and the Nifty is resting on its 50 DMA. This is the broad brush view. Stay away from indices till they settle down, and of course an extra SIP at this point of time will go a long way in creating not only wealth for yourself but for your loved ones. Now Sakshi, what happened on Wall Street, and what is the most exciting thing that's in the DII versus FII battle that we track very regularly?
Absolutely, Shail. So overnight, we did see that the US benchmark indices, they reversed strong early gains. They finished in the red. Dow Jones slipped by about 0.6%. S&P 500 declined by 0.8%, and the Nasdaq also dropped by over 1% as well. In fact, the US 10-year bond yields inched higher to 3.93%. Gold futures, they languished around $24-25 an ounce level. Also, while the WTI crude oil futures, they rose to about $75 a barrel. Now, this morning in Asia, we've actually seen the Japanese market also dip a bit. So 1.1% loss for Nikkei, the Taiwan also plunging by 1.8%, and the Kospi dropping by 1% as well, and the Straits Times was down by 0.3%. But interestingly, it's the FII and the DI number that you point out. The foreign portfolio investors have remained net sellers for the 4th consecutive session. They offloaded stocks worth 3314 odd crore rupees as of yesterday. It's the DIIs, the domestic institution investors, that were ahead, and they consistently bought for the last 4 trading sessions. They purchased equities worth 3,801 crore rupees. So not only combating what was lost by the FIIs, but also pouring in more money as well. However, looking at the subdued overnight trade on Wall Street, as well as weaker start for the Asian markets, we are actually looking at a gap down start today. You also pointed out Gift Nifty, so that's quoting around 24,200 odd levels. That could be seeing a dip this time around as well. We also have to keep an eye out on a whole host of stocks which will be coming out with their earnings. Stocks like Apollo Tyres, Welspun Corp, Godrej Consumer. We also have Balaji Amines, Sula Vineyards. They will all be reacting to their quarterly earnings. But Alembic Pharma, Cochin, Concor, Garden Reach, Page Industries, and even LIC, JB Chemicals, Ircon International, RBNL and MRF are these companies which will be reporting their results as of today as well. So we'll have to keep an eye out on a whole host of stocks. Also, apart from this, the rate sensitive stocks, sectors like real estate, for instance, autos, for instance, railways, financials. We will keep a keen eye out on all of these because of the RBI's rate decision that will be announced and the policy decision that will be announced at 10 a.m. by Governor Shaktikanta Das. Now, in terms of stocks, I'm keeping an eye out on NTPC. The renewable energy company has launched the first 60 megawatt phase of its 150 megawatt Gujarat solar PV project in Gujarat. This has brought NTPC's total installed and commercial capacity to over 76,134 megawatts as well. Abbott India is another one. Earnings came in 13% surge year on year to 328 odd crore rupees, with the revenue up by 5.3% to over 1557 odd crore rupees. Hindalco is going to be in focus. It's reported a slight 3% decline in the net income to $151 million for Novelis for Q1 FY25 through the net, although the net income also excludes the special items that surged about 32% to $204 million as well. So keep an eye out on Hindalco, that will be reacting to these numbers of Novelis. Apart from this, NHPC is going to be in focus. The Q1 consolidated profit grew by 1.2% to 1108 odd crore rupees, up from 1095 crore rupees a year ago, but the revenue fell by 2.3% to 2694 odd crore rupees. Gujarat Pipavav Port is going to be in focus. Q1 FY25 consolidated YOY numbers show revenue up by 14.4% at 246 crores. EBITDA also increased by 40.2% at 150 odd crore rupees. EBITDA margins also came in higher at 61% versus 49.8%. The profit also jumped substantially higher, 61.8% higher at 110 crore rupees. So strong earnings coming in for that one. Radico Khaitan Q1 consolidated YOY numbers show revenue uptick of 9% to 1137 crores. EBITDA improved to almost 25% higher. EBITDA margins came in 58 basis points up at 13.1%, and the net profit also improved by 13.5% to 77.4 odd crore rupees as well. Aadhar Housing Finance, the Q1 consolidated YOY numbers show total income up 20.6% at 697 crores. Net profit improved by 37% at 200 odd crore rupees. Signature Global, keep an eye out on this one. Q1 consolidated YOY numbers show that the revenue saw a sharp bounce of 141% uptick for over 400.6 odd crore rupees. The EBITDA loss, however, came in at 2 crore rupees. This is substantially lower than 10 crore rupees of EBITDA loss the company had reported earlier. Net profit came in at 6.8 crores versus loss of 7.2 crores. So the company is definitely reporting profits on both operating level as well as on the bottom line. Welspun Corp has reported a 47% increase in its profit to 247.9 crores, and that's despite a 23% drop in its revenues this time. Balaji Amines, it's seen a 32.7% plunge in profit to 45.6 crores. Its revenues have also come down by 17% to 384 odd crore rupees. Lemon Tree Hotels, the company has seen a 27% drop in its profit to 20.1 crores, and when we see despite a 19.5% increase in the revenue here, so some disappointment on the bottom line. Apollo Tyres, it's reported a 24% drop in its profit year on year to 302 odd crore rupees, although the revenue saw just a mild uptick of 1.4% odd. ITD Cementation, again the profitability jumped 91.4% year on year to 100 crores, while the revenue increased by 30% this time around as well. So these are some of the stocks that I'm keeping a keen eye out on, Shail.
Right, ladies and gentlemen, the only point I'd like to make is this DII versus FII battle. Sakshi points out that they were a bit ahead as far as buying was concerned. 3,800 crores versus 3,400 crores coming in as the sales number from the FIIs. Please keep this in context when you look at the broader picture. Yes, they are selling our foreign friends, and that's mainly because of the pain that they witness in this Japanese yen versus US dollar carry trade. And for those who are booking losses in other global markets, they are booking profits here by exiting from these frontline counters. If you look at the FII DII battle till August so far, FII cash number withdrawals are 18,140 crores and DII cash injection is 18,900 crores. And that's the reason, ladies and gentlemen, why amongst this global carnage we have fallen the least and we will rise the most. So please keep this background in mind. If you look at the FY25 number till date, FII cash sales are a net 88,600 crores, and I want to hold your breath when you look at the DII cash inflows, 1,70,981 crores. So it's 2x. All that has been sold by foreigners is absorbed by local institutions and then there is something more. So when you see this FII number, please take this into context that yes, they are selling, but it's being absorbed because local institutional flows, ultra HNI buying, as also the strength that retailers have in buying the dip is working very well. Now, how long will this dip continue? Only time will tell, but you need to believe in this philosophy that markets on the long side are working, and this is an opportunity perhaps to get back into the trade. There is no harm booking profit, and there is no harm buying into counters that are working for your benefit. Devin Bhai, Mr. Devin Choksi, MD DR Choksi FinServe Private Limited, will be joining us shortly, and at 9 a.m. we'll have Mr. Rajesh Palvia, Head of Technical and Derivatives Research at Axis Securities, joining us. What we'll also do is show you the Bank Nifty, and the Bank Nifty chart points to one very exciting thing, that over the last 2 or 3 days, while the Bank Nifty may have corrected, but what is holding ground, what is holding strength is the 100-day exponential moving average, which is for the last 3 days providing a bounce back to the Nifty Bank. As I have pointed out earlier, the high was 53,350. This was seen on 4th of July, and at the moment yesterday's close being 50,120. This is almost a 3,200 point correction, which translates to a 6% fall. In terms of earnings, we'll be looking at the structure from ITD Cementation, Radico, Kirloskar Oil and Sula Wines on the long side. Numbers have been provided by Sakshi, and of course disappointment coming in from GMM Pfaudler and NHPC. Sakshi.
All right, let's welcome on board Mr. Devin Choksi, MD of DR Choksi FinServe. He'll be joining us very, very shortly. Meanwhile, we have a lot of brokerage houses reports, viewers, that you should keep an eye out on. Apollo Tyres review. Remember, there's a JP Morgan report with an overweight rating and a target price of 555. The Q1 earnings, they believe, were a sharp miss on the margins, and they will be watching for the commentary on the one-offs or the lumpy items that contributed to the lower numbers this time around. They also believe that the consensus estimates will be revised downwards after these disappointing earnings in Q1. On Pidilite, Macquarie has come out with a report. They have an underperform rating with a target price of 2,300. They believe the Q1 earnings were in line with estimates, especially on the PAT figure. They have a bullish growth outlook, which they like. They also have an optimism on the market demand and ability to deliver sales growth. And they also believe Pidilite has strong volume growth across the consumer bazaar and B2B segments, healthy gross margins. So those are the key details that they have liked within the earnings. On Dr. Lal PathLabs, Goldman Sachs came out with a sell rating and a target price of 2450. Remember, they believe that Q1 sales and the adjusted EBITDA was driven by a combination of higher testing per patient and the change in product mix. They also believe that mostly EBITDA margins have come in line with estimates because of the better mix right there. Hindalco JP Morgan has come out with a report with an overweight rating and a target price that they have slashed to 725. However, they do see some near-term headwinds led by softness in the LME prices, flooding in the Novelis Switzerland plant, EBITDA impact that has been seen, and the weakening scrap spreads led by rising prices of UBC is something that they mentioned. Godrej Consumer Products, Morgan Stanley has come out with a report with an equal weight rating and a target price of 1325, a Q1 revenue miss, while EBITDA margins ahead of the Morgan Stanley's estimates. They do believe while India business volumes are strong, they also believe that overall worldwide some of the margins and the volumes are continuing to be lackluster at this point in time. So those are some of the brokerage houses reports that we have. I think we do have Mr. Devin Choksi now with us. Warm welcome to you, Mr. Choksi, and thank you so much for taking the time out. Good morning. It's always a pleasure to be talking to you, especially today. Again, it's going to be another marquee event that the markets are going to be keeping a keen eye out on. Do you think things will change with respect to what the RBI really thinks in terms of the interest rates, at least the stance that the MPC will have, and the approach, at least some hint of a rate cut is expected, and that could bring in some cheer back to the markets?
Yeah, good morning, Sakshi. A very pertinent point of view here. That RBI have options. Today, they have an option to basically bring down the rate of interest and kickstart the process of growth in the economy because government has already lined up the infrastructure expenditure in the budget, and they have lined up several other programs in the social economy as well. From that perspective too, I think the rate of interest reduction would be, I think, a good beginning from the point of view of execution of those projects. If not now, in a second option, if they want to do it, I think later, then it would be, I think, closer to the festive season, wherein probably I think they would be reducing the rate of interest somewhere in September or October. In my understanding, there is no harm in doing it now because I think most of the major events are now behind us. Budget is behind us. A good set of monsoon has already progressed in the first half of the season. So certainly, I think there is an enough amount of confidence that the country would have higher amount of food grain production. So from that count, the inflationary threat is also reduced. On the other side, the crude oil related inflationary threat is also reduced significantly. So if you are looking at, I think the inflationary pressure, I think probably it has subsided significantly. Now you have got a choice out here that whether you want to reduce the rate of interest now and kickstart the economy with the money that you want to infuse into the system, or you want to still wait to find the banks, I think, in a comfortable position for mobilizing their deposits. In my viewpoint, I think there is no perfect condition. So maybe I think I would be advocate of reduction in the rate of interest now, if not later.
Right. Namaste Devin Bhai, a very warm welcome to you. As always, your calm and your calm voice and decades of wisdom always help our viewers in navigating volatility. When you see this problem that we are facing over the last 3-4 sessions, this fight between the US dollar and the Japanese yen, what advice are you giving your clients? Is it wait for these dark clouds to sort of go over? This is a problem that has been, how should I say, foreign in nature. We are, of course, paying a small price for it, but it also gives an opportunity to come in into the market at a lower level. Or are you advocating profit booking even now, given the fact that we've surged very, very sharply on many, many stocks and many, many indices?
Yeah. Good morning, Shail, and thanks for having me on this show. It's always pleasure. Well, I believe, I think when the traders exit, the investors enter. That is a rule that I follow generally. That whenever I think the traders exit the market, it's a very good omen for investors to enter into the market. It is because of the FI traders who basically, I think, started unwinding their trades, which they had carried, the leverage trade that they have carried by creating the arbitrage on the long on the yen and probably short on the dollars thereafter, creating a proper arbitrage out of it. I think that unwinding process has given the opportunity to the investors, equity investors, because those who bought yen and invested into the other asset classes like equity, including emerging market equity, they are the ones I think who are exiting without any fundamental demerits in the economy or the corporate sector. So from a perspective of buying a good quality equity stocks, I think then probably I think this is a better time to buy into. Fortunately, as I've been always saying, that some of the large cap companies they are available at a valuation which is far more comfortable today than ever before. On one side, they are talking about growth, which is a rational growth. I'm not saying exuberant growth. It's a rational growth that they are talking about, along with the economy. And on the other side, I think these companies, if they start getting available to you at 5, 10, 20% discount, then it makes sense to buy them into the portfolio because ultimately in next 12 months, 15 months, 18 months time, you're going to make the benefit out of it. So our view is very simple, be stock specific, be in the quality companies where I think the fundamental supports are always there. And I think buy this kind of a fall as an opportunity. May not want to buy all at a time, but definitely I think you should be buying because there is enough amount of liquidity also in the domestic market to back up this kind of a fall in the marketplace. So I think this is probably an opportunity as I see it, at least in quality stocks, but not across the market.
Right. Um, Devin sir, also now want to understand from you the rest of the 4-5 months that are remaining in this calendar year. What is the tenure and the texture of the market likely to be like? And you know, what is the prudent advice that you would advise, since we've actually seen a dream run in the markets thus far? Even if the markets were to consolidate, probably rise a bit from here, what is the prudent advice that you would give retail investors to follow after major of the events are over, and probably there could be a moderation in the returns that we can expect on the markets?
So I think the one line advice to retail investors is that I think don't follow narratives. I think start following the fundamentals. I think that is sufficient for everybody to understand this part of it. Currently, the market is moving in a euphoric manner. Even if I think a single positive news, and I think they want to give the price earning ratio of 100, to some companies. I think that's a craze. I think this is something which is going on. When you see the global peers, I think with similar businesses in the global environment, you don't get these kind of valuations. And I think it's a matter of time when the valuations start getting rationalized. Maybe I think in the first place you will have some amount of growth getting tapered down because on a higher base you can't be sustaining the higher growth that you have been producing. At least in some of the mid-sized, small-sized companies where they are basically right now quoting at 100, kind of crazy valuations. Those companies they deserve to come under some amount of I think time corrections or maybe even price correction to a certain extent. I think they deserve to come under that. And that's where probably I think investors will have to be mindful. If you enter at a wrong time, then probably I think your wait to earn return out of this market will be extended, I think by 2, 3 years easily. So that's where I think we believe that I think you need to be also planning out your entry into the stock when the market gives an opportunity at a given point of time. So that is where probably I think you will succeed. So yes, I think just simply not following the narrative, but I think start looking at the financials of the company. That is more important.
Okay. Right. Well, Devin sir, there is another thing that I want to ask you. Are you keeping any key sectors that still hold value, that have not participated in the markets thus much? And probably it will be a better idea to shift some of the fresh money that you would have got, investors would have got in the recent profit booking, to shift your money there where actually the value exists. So, which are the key sectors you're looking at where fresh money can go into?
Well, I don't think that I think I'm talking about any particular sector because when you are a long-term investor and we are invested, I think, ahead of the bull market, obviously our portfolio is structured for the eventual benefit that you get into the bull market. I think that is the situation in which we and our clients are at this point of time. So obviously, I think whenever we get the opportunity, we definitely take some cash out of the lofty valuation in some cases and keep those cash ready for buying back again those companies which are giving you opportunity, which are existing in your portfolio. So instead of expanding the number of ideas in your portfolio,
Yeah.
maybe it's a good time always to also consolidate part of your portfolio in a given situation like this. Having said that, we also look at I think some of the fresher ideas I think which we like, maybe in the auto ancillary space, maybe in the capital goods ancillary space, maybe in the other ancillary areas, including in IT, R&D segment, or even pharma R&D segment. There probably I think we keep investing our money in this kind of market when the opportunity arises. One classic example, we allocated funds recently to PI Industries. I think we felt that I think this is one company which is now completing all the pace that it has had in past, and now probably I think trying to record better numbers. Fortunately, these quarter numbers also came relatively better. So we believe that I think such kind of ideas can be added into the portfolio in a given market or in a falling market.
Right, ladies and gentlemen, the pre-open is upon us, and uh, it's a green tick, uh, 20 points higher. Let's see how far this continues. 24,321 is upon us. Let's look at the major contributors. A nice deep green tick on HDFC Bank, 26 rupees higher, 1638, now just 15 higher. That's the volatility for you. Infosys is 2 rupees lower, 1789, nothing to be worried about. Reliance is 50 rupees lower, 2880. Now this is worrisome, and that's the reason why the Nifty has slipped into the red. Tata Motors is 2% higher, 1046. This is good news. Let's look at what ICICI Bank is doing. This is providing support both to the Nifty as well as the Bank Nifty. 17 rupees higher at 1190. The Nifty is in the green, and now we'll focus on what is happening in the space as far as earnings are concerned. Okay, Bombay Stock Exchange taking it away. A very, very strong set of earnings, 12.5% higher, 2700 on the board. Ditto for Signature Global, 5.5% higher, 1507. A very underappreciated stock but doing fantastically well is Gujarat Pipavav Port. The earnings have been phenomenal, 5% higher, 232. You have a green tick again on Suzlon, 4% higher, 7250. Okay, earnings show Chemplast Sanmar, 3% higher, 581. And of course, you have a fairly decent move coming into Idea Cellular, 1.7% higher, 16 rupees. Radico Khaitan, again earnings led, 2.8% higher, 1717. A quick look into FNO stocks. Let's see what is being thrown up. Yes, weakness in Apollo Tyres because the numbers were for the first quarter below expectations. Almost 3.7% lower. 501 is where strength is coming in at this particular counter. What else is weak and painful? Nothing much. 1% cut on HDFC Life and Bharti Airtel. I won't be much worried about it. It's a fairly open and good pre-open because we were expecting 130, 120, 100 point gap down. It's sort of still in the green, and let's hope it continues. Let's get Devan Bhai into the conversation and talk about the wealth management, the financialization of asset space. He himself is one of the biggest beneficiaries of this trend over the last 5-7 years, but the KR Choksi stable has been with us for the last 8 odd decades. Devan Bhai, a sharp sell-off in counters such as Angel One, BSE, to some extent other brokerages as well over the last 2 odd months, but Life and Spark are again coming back into exchanges such as BSE, MCX, and of course a few of the listed brokerages. What would be your favorite stock in this sector?
So I think we continue to hold, I think, very bullish view on the prospects of financial market intermediaries, and they would be probably stock exchanges and the depositories. The two of the stock exchanges particularly are listed, and I think one of the depositories also listed like CDSL. I think one will have to look out for the listing of NSE and NSDL to complete the circle of investing into this kind of businesses. We remain, I think, distinctly positive about these businesses also because of the fact that on one side, the size of the assets are growing from $5.5 trillion value of market capitalization. The value is likely to increase to 10 to 12 trillion dollars somewhere in 2030-35 period. Now, if that kind of a situation in which you are already entering into, it would be interesting to buy into some of the depository companies largely also because of the fact that I think their business is going to grow from here on with new listing of companies, new investors coming into it. Number of households, I think today are about 20% of India's household who are coming to the capital market. They are likely to go up to 50%. So I think the business environment looks definitely brilliant for them. Same is the situation with stock exchanges. The products, I think, which are already there, new products are already entering into, and new segments are also being entered into, including insurance. I believe that I think these are some of the opportunities for bigger opportunities for larger players like financial market intermediaries. Having said that, I think you will have other intermediaries also who are serving the investors like AMC companies particularly, or even for that matter, I think the direct investment which is happening into some of the full service brokerage houses who are providing investment based advisory services. For them also, I think the time is probably going to be better going forward. So it is reason to remain bullish about it because directional call remains absolutely positive. Maybe in the near term, you have sometimes overvaluation situation, which the market gives the moderation or the rationalization in given situations. So I don't think that anything is wrong with those companies.
Devin sir, the other thing I wanted to understand from you is the entire energy space. The upstream companies, Oil India, ONGC, the sharp rallies and the bout of moves that are coming in, 7% intraday moves that are coming in here. How are you looking at this energy basket? Can the momentum continue? And at these levels also, does it merit investors' attention right here? And what portion of the portfolio should be looked at with respect to the energy basket, and should be catered to within specific stocks within the upstream and the downstream majors?
So let me first say that I think fundamentally things haven't changed much for most of the energy companies. There is nothing which has gone completely changed as far as their business model is concerned. They remain pretty solid as they were before, except the fact that I think there is always going to be a challenge with the government policies. Time and again, they would interfere into some of the policies in order to safeguard the energy prices. So that part I think continues. What is changing? A change which has happened is that government has very categorically said that they are not in hurry to sell any of the public sector companies. So that means they are controlling the supply side situation of the paper. Moment you control the supply side situation of the paper, on the other side, I think the buyer, the person with the money bag, will definitely I think try and create a narrative to buy that stock into the portfolio, and that's what exactly is happening in some of these oil PSU companies. In my viewpoint, having said that, I think they are having cash, they are deploying cash, they are creating the growth, but at the same time, the situation of investors buying the stock largely because of the fact that the government may want to offload some of the PSU companies somewhere in 2027 2028 period ahead of 2029 election. So I think ahead of that, I think this rally is continuing. Maybe I think another 2 years of very strong rally that one can expect out of this kind of companies, though the fundamental changes are not many, as I must add once again here.
Right, that's the view that is coming in from Devin Bhai. Let's look at some other parts of the market that have now firmed up. Let's look at FDC. This is again a very well known pharma company. Earnings that came in for the first quarter yesterday were very good. The counter is now consolidating near its record highs, trying to open 1.4% higher at 525. What else is in good mood? Okay, you have a green tick on BEML and BEL, although the numbers are just about 0.2% higher. What's in pain in the Nifty? That will give you an idea where the selling pressure is coming on. At the moment, it's IndusInd Bank and Eicher Motors and Tech Mahindra. Remember, Eicher Motors is the earnings boy today, and profit after tax for the first quarter is likely to rise 10% year on year. Devin bhai, you've been a large votary of the PSU, I'm sorry, the private banking team. Wherever there is deep value, you've sort of advise investors to buy for the long term. But IndusInd Bank has been a long term disappointment. I personally remember seeing 2200 some 3-4 years ago, and now the stock languishes at 1345. There is really any merit in looking at this counter at a time when Axis, ICICI are at record highs, mid cap private sector banks, Federal Bank are doing very well. What is ailing IndusInd Bank?
Very pertinent question, and I think I must add one more to it. On one side, I think they have commercial vehicle portfolio, and I think the lending side, I think, is really doing well. On the other side, I think the diamond industry portfolio that they are having, one would definitely, I think, have a lot of questions to ask because probably IndusInd Bank today in the industry is the largest as far as I think lending book to the diamond industry is concerned. And as we all know, I think the situation with the diamond industry is not so healthy. So obviously, I think you are always going to have a challenge in form of how the books are going to be behaving going forward. That could be one of the reasons for which I think this particular bank is significantly, I think, getting affected. Having said that, I think they are trying to diversify themselves from the heavyweights, I think, diamond and commercial vehicle to some other areas, but that's what is taking time. And I believe that's where probably I think most of the companies are challenging. That is where I believe that I think my narrative has remained consistent all throughout, that go with the companies or the banks which are big in size, because I think the big is getting bigger, is getting validated with the size of the economy growing now. So from that perspective, I believe that I think the other options are sounding better, appearing better. Their business plans are, I think, reasonably on a different track, a better track, I would to call it. So likes of SBI, likes of HDFC banks, likes of ICICI bank, or Axis Bank for that matter, I guess I think they have a reasonably good amount of clarity about the strategies they are implementing in building their AUM book. So one definitely I think pays a higher amount of allocation to those companies in the portfolio.
Okay. Let's also welcome Rajesh Palvia, Head of Technicals and Derivatives Research at Axis Securities, in the panel discussion with us. Rajesh, good morning. Good to have you with us. Signs of, a weaker opening again in trade today after yesterday's celebrations. So the volatility continues. But your own sense, how do you see the markets going? Will there be any opportunities for you to add any stocks today?
Good morning, Sakshi. Good morning, Shanji. Good morning, everyone. So, volatility is going to remain in the system for some more time as global cues are not supportive, and the way market has broken down its 20-day moving average and continuously sustaining below to those levels since last three trading session for Nifty. So that clearly giving us a sign that we may face supply pressure on the higher side, though we have seen some recovery in previous day, but still we are not able to take out 24,350, 24,400 mark. That is important level on the higher side for the Nifty. So until Nifty not manages to cross about 24,400, trend is likely to remain on the volatile side. Maybe we could trade in range of 23,900 on the downside, and on the higher side 24,400. This could be the possible range for some couple of days. Either side breakout or breakdown will decide the further course of direction from here onward. For Bank Nifty, we have already broken its 50-day moving average. So here again, near-term setup is still on the weaker side for the Bank Nifty. We are almost trading near to the important support area of 50,000. If it breaks below 50,000, then there would be some more supply pressure we could see in the Bank Nifty also, and then possible downside we can see towards 49,700 to 49,500. For Bank Nifty, the major important challenging level on the higher side would be around 50,600. Until Bank Nifty not crosses those level, again, whatever pullback we will see on the high side would attract a selling pressure. So both indices are, struggling to cross their near-term resistance area. On the stocks front, I think one can look at on sugar space where we expect that some momentum could be there on the higher side. So Balrampur Chini can be looked at for intraday perspective. The way stock is now, manages to cross its last 3 days down move, there is a high possibility that Balrampur Chini can extend gain. 505 to 510 would be the target with stop loss of 488. And the second stock where we are focusing, that is ONGC. That stock is also showing good traction. So ONGC can be a buy for upside target of 340 with stop loss of 323.
Right, sir. We have a mild red tick on the market, nothing to be worried about. 60 points lower on the Nifty, which is on its weekly expiry today. 21 point uptick on the Bank Nifty. Please keep this in mind. Nifty 500 has opened 37 points lower, nothing to be worried about. This is the broadest measure that we have, and its health is paramount to the success of intraday trading. The IT index is about a percent lower. This is worrisome. Okay. Now let's get into the heavyweights. A green tick on HDFC Bank, 7 rupees higher, 1630. This is good news. Reliance, 13 rupees lower, 2917. We'll absorb this. Infosys, 27 rupees lower, 1765. This is not looking good. And how about ICICI Bank? Okay, ICICI Bank at the moment is flat, 1170, which is the top gaining counter amongst the index heavyweights. It's Tata Motors about a percent higher, 1034. Now the trend is defensive. You see a green tick on Hindustan Unilever and you see a green tick on ITC. This is going to help the index in the long term, but Infosys is the top losing counter. Reliance is also in the red. This is a bit worrisome, but we will not be edgy about it. Let's look at the Bombay Stock Exchange. A stunning set of numbers. The counter opens 7% higher, 2563. Remember, this is still around its 200 DMA. Ditto for Gujarat Pipavav Port, 5% higher, 233. Very strong set of numbers. Radico Khaitan and Chemplast Sanmar are up 3% each. This is positive. Their earnings are being appreciated by the market. What else is in the green? You have a nice bounce happening on KPIT Technologies. This is also looking good. Most active counters, no change. Okay, there is one interesting stock. HFCL, remember the rural tender that I was talking about yesterday? Beyond 60,000 crore rupees is what the government is trying to raise from telecom tender. So all telecom equipment suppliers are doing well. HFCL 1.5% higher, 140. BSC is gathering momentum, 7% higher. I think this should be the first question asked of Rajesh ji. Rajesh ji, do we participate in this uptick that you are seeing on the Bombay Stock Exchange, or is this overdone?
I think Shelji, after this gap up opening, stock is almost faced supply pressure around for 2660, which is a previous swing high, which was formed in the beginning of August itself. So I think the follow-up buying action will continue above 2660 level. So that level needs to watch for intraday perspective. If it crosses those level, yes, there could be another round of rally we can see. But those who have already bought can hold the position as there is a gap up opening, and now stock is holding above 2550 level. So I think very small stop loss to hold the position 2550. If it's hold, then stock may attempt to move beyond 2600. 2660 would be the next target.
Okay, the market is absolutely defensive, ladies and gentlemen. Nifty Pharma Index up 0.5%. The Nifty FMCG Index in the green. We tracked 19 indices for you. Out of them, 16 are in the red. The top loser is the Metals Index, 0.7% lower, followed by the Energy Index, 0.6% lower. Remember, both metals and energy rose very sharply yesterday. This is the first 5, 7, 10, 15 minutes of the market. Let us wait for it to settle. Advanced decline ratio is 1:1. We are opening on a back foot after yesterday's stunning rally of 300 points on the Nifty, and of course today is also the weekly expiry. This is the broad structure. So far it's perfect. Nifty 70 points lower, 24,220. This kind of a pullback is expected. Let's wait for the first 15 minutes. Sakshi, what are you watching?
A whole host of stocks like Abbott India, which is up by about 2% after the earnings within the F&O space. We are also seeing Pidilite post the earnings, that's up 2.2%. Then we also have some stocks like Coromandel International, Bharat Forge, that's picking up pace. ITD Cementation, remember this is the stock that came out with the stunning set of numbers, and you can actually see a 6% uptick on ITD Cementation as well in trade. Of course, apart from this, let's also look at how NTPC is reacting. While the entire PSU space is still down by about 0.9%, there was a good news that's coming in on the way of NTPC Renewable Energy that launched a new plant. So flattish trade on this one. Apart from this, it's only the FMCG and the pharma index that's holding up to some gains, but the rest of the sectors have all slipped into the red. It's the India VIX that you need to keep an eye out on. 3% uptick now on India VIX. 16.6 level is what the India VIX is trading at. Again, uptick coming in on that one. So we have to really watch out for this. There's a block deal also, large trade taking place on Protean eGov, large trade of 12 lakh shares or almost 3.2% equity worth about 236 odd crore rupees has seen exchanging hands at 1805 odd rupees. So we'll look at how Protean eGov is looking at. It's only about a 1.7% downtick. We also have some downticks coming in on the finance space. Fusion Microfinance at 7% lower in trade. Among the gainers, you have just the large caps like ITC, HDFC Bank, you have Cipla, Dr. Reddy's, Tata Motors, Britannia. Only a handful, 5-6 stocks on the Nifty that are holding up onto the green. Rest of the markets have all slipped into the red right now. LIC is holding up 1.4% higher at 1139 right now within some of the PSU banking names. Let's get Rajesh into the conversation. How are you looking at LIC, and would you still buy the counter at 1138?
So, most of the insurance stocks have corrected in last couple of days in line with the market correction. But if we analyze on the long term perspective, yes, LIC is still looking bullish. Stock is holding about 20-day moving average. So I think near term trend may attract some buying action. Till stock is holding above 1110, I think one should remain on the long side of trade for LIC. On the higher side, immediate supply zone is placed at around 1180, 1190 zone. If it crosses those levels, then 1250 would be the next target. So our view is bullish for LIC. Buy on dips is the strategy for short to medium term perspective.
Okay. Tata Motors, about 0.7% of an uptick for this one, 1032. That's another counter that I wanted to discuss with you, Rajesh. It's been throwing us some momentum over the last few days. Or are you continuing to buying this stock? Vis-a-vis Maruti, that's now recalled about 2555 Alto K10. How would you really look at Tata versus Maruti?
So both stock have witnessed, profit taking in last couple of days. So Tata Motor again, because of global cues are not stable. Tata Motor also, attracted some supply pressure. If I analyze the structure is almost similar for both the stock, but the important thing to watch for that Tata Motor is still almost trading near to its 20-day moving average and holding above 50-day moving average, but Maruti is almost slipped below to those moving averages. So if I compare both the stocks, I think Tata Motor is looking one notch better compared to the Maruti at this juncture. Our stop loss for positional perspective is 1,000 rupees for Tata Motor to hold on. If it's not breaks below 1,000 level, then there is a possibility that Tata Motor may also start upward momentum once market stabilize at certain point. Then possible target for Tata Motor we can again see towards 1100 to 1140. For Maruti, 12,000 is the critical level in this decline. So those who have already bought or want to buy the stock should keep strict stop loss of 12,000 to deploy some long trade in the stock. As overall long-term structure for most of the auto stocks are still on the bullish side. Even auto index is also in the bullish trajectory for the long-term chart. So I think once market stabilize, I think automobile space will again, start, upward momentum. So in decline, Maruti can be a buy, but one should deploy very, small quantity. 12,000 is the immediate trading stop loss. On the higher side, 12,600 is the immediate supply zone. If it crosses, then rally can extend to 13,000 also.
I think the first 7, 8, 10 minutes of trade show activity which is hectic on the BSC 500 set of stocks. I'll just mark the advanced decline ratio there. You need to look at that space. Remember, the Nifty is grappling with not only negative sentiment on Wall Street, but its weekly expiry, and of course the credit policy that is there from 10 a.m. onwards. But look at this data on the NSE 500. For the moment, you see this index flat at about 22,828, equal number of stocks, 258 in the green, 242 in the red. But what is the beauty of this market? Look at how number of stocks that are more than 3% higher and between 5% are 10. Number of stocks that are losing between 3% and 5% are just 4. And how are the stocks that are more than 4%, 5% higher? They are 4. BSE and Chemplast Sanmar we've discussed. There's Root Mobile and BBTC. This is the parent company of the Bombay Dyeing Group, Bombay Burma. So the granularity of the market is towards positivity. Now let us see what happens beyond 10 a.m. One stock to look at, is, of course, Pidilite. Very strong set of earnings, the counter at a record high and doing pretty well. Second day running. Rajesh ji, do we take a view into this stock or is it overheated? What are your charts telling you?
So, Shanti, continuity is there in Pidilite. The way stock is now trading almost its all-time high trajectory. Almost stock after consolidation of 3 4 months, now stock again breaking out its all-time high trajectory. So, the way the market is volatile, so I think some long bets are shifted to the defensive stocks like FMCG is the favorite choice in this kind of volatile market. And we have seen good traction in most of the pant and home improvement related stocks. So Pidilite is one of the stock where we are seeing outperformance. I think if it's hold about 3200, I think continuity would be there for Pidilite, and the possible upside we can see towards 3350 also in next couple of days. So I think those who've already bought the stock can hold on with stop loss of 3200.
Okay.
Okay, I think Rajesh ji, a medium term view on HFCL is required from you. Now
Yeah.
140 rupees. I hesitate to ask this one on a public platform because of the past issues with this company, but it's the top traded counter. It's up fairly sharply, and there is a sectoral tailwind. HFCL for you, ladies and gentlemen, via Mr. Palvia, and of course take another independent view.
So I think Shelji, technical structure is very strong for HFCL. The way stock is moving in higher top, higher bottom formation, and stock is almost trading near to its all-time high trajectory. After a consolidation of almost 5 6 months, and now stock broken out that supply zone, and the way stock is attracting the buying interest, we believe that here there could be another round of rally and possible upside. We could see towards 155 to 160 also. So those who are already long can hold the position with stop loss of 130.
Okay. Uh, the small caps are coming back into the green, about 2 tenths% higher. Several of the stocks here that are rallying in trade. One stock that merits your attention is Triveni Turbine. The stock after yesterday's 6% jump is another 5% higher in trade. Remember, the stock has already turned into a multi-bagger in the last 3 years, viewers. 119 rupees is what around it was trading 3 years ago, and right now is hovering near all-time high levels. 667 right now, 4.5% higher in trade. How would you really approach this stock, Triveni Turbine? It's too much too done, and or does it still offer value?
So looking at the technical, yes, there is a continuity of uptrend. Stock is moving in upsloping channel on the daily chart. Stock is very well holding above all its important moving average. Whatever dips which we are getting in the stock are holding the ground around 50-day moving average. So I think overall trend is bullish for Triveni Turbine. I think buy on dip should be your strategy. At this juncture, stock has already moved up sharply. So I think if you get any cool off effect towards 645, 650 would be again attractive level to buy for trading perspective. Your stop loss should be placed at around 630 to hold on the position.
Okay, Rajesh ji, you did talk about BSE, and the entire capital markets related space is now buzzing. CAMS is 2.5% higher in trade. We also have CDSL that's now buzzing about 1.4% up in trade. Several of the brokerage houses stocks have been consistently on the move. Stocks like Angel One, Edelweiss Financial was up in trade yesterday. What beyond BSE within this space looks good to you?
So I think again there was a data that again we have seen a very good jump in demat accounts. So I think there is a continuity of financial inclusion in the capital market, and most of the new accounts are opening month on month basis. So it's clearly showing that upward trajectory for this vertical. I think so. I think CDSL, CAMS, BSC, all brokerage related stocks may do well as volumes are continuously moving up. New accounts are opening, new SIPs are opening. So I think this financial market is doing good. So CDSL again negotiating with its 20-day moving average. after a brief correction. So I think here again opportunity to buy CDSL with stop loss of 2320. And I think if it sort of crosses about 2420, then possible rally can extend to 2600 also for CDSL on a short period of time. CAMS is also looking attractive. After this correction, again, stock has taken the support from its important support area of 4000 level. So I think the way stock has moved up in last two trading session, I think there would be continuity of further more upside. 4500 is the immediate target for CAMS. So those who have already bought or want to buy the stock can hold on the buy the stock with stop loss of 4200. Upside target is 4400 to 4500.
Okay, ladies and gentlemen, two important things. Firstly, we'll look at the 15-minute candle of the Nifty. That will give you an idea what the institutions have done in the opening first stress of the market. High of the candle is 24,263 and the low is 24,198. So it's a 63-point candle, nothing to be worried about. What's really interesting is the Nifty is trying to make an effort to move above that, and that's a very, very big plus. Remember, till 10 a.m. nothing much will happen because the credit policy is due. There is no expectation from that one. All rates will be held steady. Now, what is moving? Let's pat Mr. Rajesh Palvia on his back. He started with a view on Balrampur Chini, and I don't remember the last time Balrampur crossed 500 rupees. That was in a very, very different time and different year. Okay, yes, this was in March 2022 when the counter was at 520. Rajesh ji, firstly, a great call. Now tell us what to do. बाजार में मृदुलता आ रही है आपको एक्सचेंज और पिडिलाइट की तरफ से, और मिठास आ रही है बलरामपुर चीनी की तरफ से. बताइए क्या करना.
तो आई थिंक बाजार में वापस मिठास लौटने का प्रयास तो होते हुए दिख रहा है. निफ्टी इज होल्डिंग 24,000 लेवल. आई थिंक शैल जी अगर ये होल्ड रहा तो आई थिंक देयर वुड बी some support buying action will again attract in the market. The way broader market and mid cap space is doing good, I think once we get a stability in global cues, I think our marketers are again ready to continue upward momentum, and we can see a sharp V-shaped recovery also. Balrampur Chini, we are holding bullish view, and the way stock is now approaching to 500 level, we believe, and even now most of the sugar stocks are doing good. So I think sector tailwind is also supportive. So we holding our bullish view for Balrampur Chini. Those who have already bought can hold on the position with revised stop loss of 490 and upside target we could see towards 550 to 520 also.
Okay, and this is a wonderful point that Rajesh makes. There is a sectoral tailwind. We track at Business Today about 28 sugar companies. Out of 28, 25 are in the green, and of course Balrampur is leading the charge in the FNO space, but others such as DCM Shriram are up 5% at 1154. Dhampur Sugar is up 2%. Kothari Sugar is up 1.5. Awadh is in the green. Mavana, Dalmia Sugar, Dwarikesh, all of them are trading in the green. Sakshi, one very important thing is the reversal and the strength that we are seeing in the defense counters. BDL 0.5% higher, 1411. Garden Reach 0.5% higher, 2192. Cochin Shipyard 1.5% higher, 2385. And of course Mazgaon Dock 1.8% higher. Railway stocks, very strong enthusiasm for Kavach maker Kernex Microsystems. Limit up 5%. There is a news that has come in from the railway minister. I think he is looking for bulk tenders for Kavach equipment. HBL Power in the green. Ircon, Railtel, and of course IRCTC also moving in the green. Nifty still 83 points lower, 24,200. Let's see what happens. Sakshi, yours.
Right, several of the smaller pockets that are up in trade today. So stocks within the plastic space, they are higher in trade. Prince Pipe, stocks like Mayur Unique Quarters, Kriti Industries, Arrow Green Tech, these are buzzing in trade. Then we also have stocks within the engineering space. McNally Bharat is up 10% almost. You have Tribeni Turbine, we highlighted. Manugraph India is up. Ingersoll Rand is up in trade. Vatek Vabag is up 3%. AIA Engineering. These are the other small pockets that are also buzzing in trade. We also have, of course, the telecom space entirely now coming back into fore. Apart from HFCL, we also have Tata Tele Services Maharashtra that's up in trade. You have Vodafone Idea that's buzzing. Bharti Airtel is that's up in trade right now. So some such smaller pockets that are on the move right now, and I think even the fertilizers and the chemicals pack that's also buzzing in trade. So Chambal fertilizer, something that we were tracking for last 2-3 days, is again back up in the FNO space again. Let's get Rajesh ji to comment on the fertilizers and the chemicals pack. What is your own stance here, and which are the key stocks that you're keeping on your focus here?
So I think some buying is already witnessed in most of the chemical and fertilizer
Yeah.
stocks, and I think would be continuity of uptrend in this stock. Though the market is volatile, so some consolidation we can see in the near term, but I think there would be continuation of rally in most of this stock. So Excel Industries from the cash segment is looking very promising. I think if you analyze the structure for the stock is moving in upsloping channel on the daily chart, series of higher top, higher bottom formation. Stock is very well placed above to all its near-term, short-term moving averages. The way Excel Industry is now trading above 1380 level, I think there is a possibility that this stock can continue upward momentum towards 1500 to 1520 in the continuation of this up move. So 1380 would be the stop loss to buy Excel Industry at this juncture. BASF is also looking
Hmm.
promising. A very strong momentum is taken place in today's session. Stock is almost up by 11%. Now its stock is enjoying its all-time high trajectory. So I think some of the stocks are showing good outperformance in this space, and we believe that one can remain on the long side of trade in this sector. There would be continuity. So for BASF, their next target is 8,000. Those who have already in trade can hold the position with stop loss of 76.50. Another stock that we like from the space is Coromandel International. That stock is also looking
Hmm.
promising. Almost stock is consolidating near to its all-time high trajectory. I think if there is some follow-up buying action above 1650, I think Coromandel International may also continue its upward direction to 1750 to 1800 also in a short period of time. So I think here also one can focus to remain long with stop loss of 1580.
Right. Uh, let's see more
Right,
sectors.
ladies.
Yes, Shail. Yes, Shail. Please continue.
Yeah, continue, Sakshi. I just want to mark two record highs which we've been following. Lupin now beyond 2033, and of course Natco Pharma now at 1451. Yours.
Right, it's the pharma space clearly that's taking all the limelight. The index is the top moving sectoral index, 0.7% higher in trade. Even within the Nifty top 5 or 6 movers, you'll find at least 3 to 4 names that are within the pharma pack. So Cipla, Dr. Reddy's, Divis Laboratories, Sun Pharma, at least 4 of these stocks are within the top 5, top 6 movers on the Nifty. So that clearly shows you that the markets are turning defensive clearly. Within the pharma pack, Rajesh, is there anything else beyond the stocks that you mentioned that one should keep an eye out on now?
So there are so many, Sakshi, not few, so many stocks which are looking
Yeah.
very promising. Syngin, you can focus on this stock. Stock is now on a verge of giving breakout of its surrounding bottom formation on weekly chart. The way a long built up is there in last two trading session in the stock, we believe that Syngin can exhibit good amount of rally. 880 to 890 would be the next target. One can hold on the position or fresh buying can be done with stop loss of 848. Another two stocks where we can see again, all-time high trajectory in pharma space, that is Sun Pharma and Alchem Lab. These two stocks can be looked at. And the way most of the pharma stocks are showing good traction in terms of buying, I think Sun Pharma will also follow this upward momentum, and we can see a new all-time high trajectory for a stock in very short period of time. So Sun Pharma is also buy with stop loss of 1700. Upside target is 1800 to 1820. Alchem Lab is also poised to give breakout of its previous swing high. So I think here also one can deploy some long trade with stop loss of 5500. Possible target we can see towards 5650.
Okay, got it.
Right, ladies and gentlemen, while we are talking about record highs, let's look at some other ones that have hit this space. Everybody's favorite, Bikaneri Bhujia, and therefore Bikaji, 2.2% higher, 804. Remember, we've been tracking this stock since 470 rupees, which at one point of time Mayuresh had highlighted. Ladies and gentlemen, there is always this wonderful chance of making supernormal money in the markets by doing practically nothing, buying quality stocks and letting them appreciate. And that is what has happened in counters such as Bikaji and many others that we've been highlighting. Okay, what else is at a record high? It's a pharma day without any doubt. Among the record highs, Torrent Pharma, Ajanta Pharma, Syngene, Dr. Reddy's, Zydus, Natco, and of course Lupin. So that's 7 pharma companies that are at record highs today. We've discussed Pidilite, we've often talked about Colgate Palmolive, and within the FMCG space, there's another one, Pidilite. There's another one, Patanjali, 1% higher, 1831. Rajesh ji, do we chase this momentum in Patanjali?
I think yes, Shalji, one should focus two space which is showing clear, buying interest. That is, one is pharma, second is FMCG. These two space are clearly in buying mode. Patanjali, yes, I think one can chase this momentum. The way stock is now trading about to 1800 level, I think there is a high possibility that now this stock is ready for 2000 target on a short term perspective. So those who have already bought can hold on. Even fresh buy can be deployed in minor dips with stop loss of 1770. Possible target is 1950 to 2000 on a positional perspective.
Okay. Mid cap winners also throw up some interesting names. Poonawalla FinCorp is coming back after a long haul. It's up by 2.2%, 359 odd levels that you can see here. Beyond the entire pharma space that's been buzzing, you have now realty majors like Prestige Estates making a comeback, 2.2% higher in trade, just marking the prices for all our viewers to see where else is buying coming in. You have BDL from the defense space that's up by almost 1% now. FSN e-commerce, Nykaa is up by 0.5%. You also have LIC Housing Finance coming in. Fact, remember we discussed the entire fertilizers and the chemicals basket. That's also coming back into for Torrent Power. That's up by about 1.5%. That's also coming back to the focus. Several of the stocks are actually up and about. Of course, it's the pharma space. Alchem Laboratories, Ipca Laboratories, the entire space, Laurus Labs, Syngene, the entire pharma space is clearly taking it away, but there are several other stocks beyond this also that's taking up. One more stock that I wanted to highlight within the F&O space, Rajesh, for you is Trent, 2.9% higher. How would you look at this stock?
Yeah, so Sakshi, yes, we can look at to trend for buying side only. 50-day moving average has been defended in this corrective move, and the stock again, managed to cross 20-day moving average. Overall strength is there in the stock for the long term. Near-term dip again bought by the short-term trader as well as investor. I think again the stock is ready to surpass its previous all-time high trajectory. So I think those who have already bought can hold on. Fresh buying can be done with stop loss of 50, 56, 55, 60. Upside target 5800 for the stock. Again, another stock that we like as we discussed, Syngene, it's now again at all-time high. Aarti Industry can be looked at. That stock is from the chemical space is also showing good buying interest. I think Aarti Industry is also poised for giving a good breakout after 3-4 days corrective move. Here there is a possibility that this stock can also exhibit good amount of rally towards 780 to 790. So Aarti Industry one can keep on their radar to buy with stop loss of 745.
$9.46, ladies and gentlemen, the first half hour has lapsed, and in the first half hour I just like to mark the low of the Nifty, which is 24,192, and the high of the Nifty, which is 24,264. So it's a 64 plus 8, 72 point range that the Nifty is in. It's waiting for RBI governor's speech to start, and then post that speech, post the view that comes on inflation and his commentary on the resilience of Indian economy in the face of this global technical readjustment that's happening between the US dollar and the Japanese yen will be worth watching. He will talk about 4 or 5 points. India's macro balance sheet is very good. Inflation is in control. Growth has been pretty good, and of course his view on interest rates. But for the moment, stocks such as CDSL. Okay, let me just see what the stock price is at. Remember, this is the second day of move. Okay, 1, 2, 3, 4, 6 days of downtrend. I think Sakshi has already marked this one alongside CAMS. But ladies and gentlemen, this is a small exercise that all of you who are listening to Business Today should do. Just look at the size of the market capitalization of CDSL and CAMS in terms of thousands of crores. Divided by the dollar value, you will see the market capitalization coming in dollars. And then close your eyes and think, if a country which is adding 40, 45 or 30, 35 lakh DMATs, should these two companies have only this kind of valuation? If you do that exercise, that will be a wonderful way of looking at the long-term view. Remember direct tax payments, remember income tax payments. They are 20% of wealth earned. So wealth is 5x. That wealth needs to be deployed. Some of it will come into the market. It will be routed through CDSL and CAM. It's a no-brainer, but again, do this exercise. Sakshi.
All right, viewers, we'll have to wrap it up at that. Many thanks, Rajesh, for being with us on this very special edition and sharing with us all your thoughts and ideas right there. The Nifty is flat with a negative bias, 0.2% lower in trade, viewers, 24,248. It's a 48 point kind of a dip, but it's a Nifty bank that's turning green right ahead of the RBI's monetary policy review. Slightly bullish ticks higher into the green for the Nifty Bank. Nifty Bank is currently about 33 points higher in trade, 50,155. And along with the bank, of course, we do see pharma, realty, the broader market, small and the mid caps, and the consumer durable space that are showing us some ticks higher into the green. The kind of stocks on the Nifty that are still hovering higher: Tata Motors, Dr. Reddy's, Divis Laboratories, Cipla, Sun Pharma, Titan, and now ITC also joining the fore right now. Within the F&O space, Pidilite, Glenmark Pharma, Trent, Chambal Fertilizers and Lupin are among those top buzzers as well. Yes, Shail, you wanted to highlight something?
No, nothing at all. Just the Nifty is at the day's high. Now 24,250. That's it, sir.
Okay. We'll wrap it up at that. Thank you so much, viewers, for tuning into Market Today's morning edition. But do stay tuned. It's a power-packed, show right ahead for you with Shaktikanta Das, Governor RBI, also detailing the monetary policy review, the third one for the current fiscal year. And of course, after that, we will be decoding what the RBI Governor has said. So lots more coming up. Stay tuned.
महावीर जी क्या कहना चाहेंगे इस बड़ी जीत पर?
देखिए, मैं तो भाई कताऊ हूँ और गुरु हूँ, लेकिन सारे देश को जो 2016 में उम्मीद थी जो विनेश गोल्ड मेडल आएगी, उसमें इंजरी होगी, चोट लगी। फिर 2020 में जो 18 में उसका चोट लगी थी, उससे जो वो जो टूर्नामेंट था जो 20 का ओलंपिक, उसमें वो दिमाग पर जोर पड़ा था, उसके जो है वो बीमार होगी, इस कारण वो नहीं आ सके। तो उस टाइम भी जो है देश को इससे मेडल की उम्मीद थी। और मेरा भी जो है मैं 2000 से लग रहा हूँ चीन गए, और मेरा भी जो सपना था, मैं जो स्टार्ट की थी मेरी बेटी ओलंपिक गोल्ड मेडल लेंगी, लेकिन जो विनेश ने जो मेरा सपना जो है साकार करने पर नजदीक है, और जो मेरा सपने थे वो साकार होंगे।
जापान की प्लेयर जो कभी नहीं हारी, उनको हराकर वो सेमीफाइनल्स में पहुंची, रिकॉर्ड पर रिकॉर्ड तोड़ दिए उन्होंने।
देखिए, जब पहली बाउट उसकी जो जापान गई थी, तब मैंने सुबह जो मैसेज टेलीफोन करके, मेरा भतीजा जो विनेश का भाई है वो